All right, perfect. So one of the things that we didn't go over last time too much in depth that I wanted to get into that I actually got a lot of feedback saying, I would love to hear some of this is the tax benefits of real estate. So I know there's a lot of things that real estate has that benefits taxpayers and basically can allow you to pay less in taxes.
Yeah,
So tell me a little bit about that.
yeah, definitely. Like one of the biggest ones is the 1031 exchange. A 1031 exchange is when you sell an investment property and whatever money that you make, well, all the proceeds really from the sale of the investment property go into a 1031 exchange account, which is usually held like an underwriter or something. And you have 45 days after that to locate a property and 180 days to close on it. That would be your exchange property. When you buy that property, use the funds from there. You could use it as a down payment or as a hold amount. You could even buy multiple properties with that 1031 exchange proceeds from the original sale. And once you do that, you don't have to pay capital gains taxes or any kind of taxes on the gain of that property.
That's ridiculous.
Yeah, yeah,
No way. Okay, so let me get this right. So essentially, I could start off buying a $200,000 home.
yeah,
I could sell it for 500,000,
yeah,
and I would have to pay zero in taxes
yeah.
if I buy another property in 180 days. It was.
Yeah, you have to close on it within 180 days, but you have to locate it, like basically have it under contract in 45 days.
Yeah.
And there's ways to get extensions on that too.
That's golden.
Yeah.
That's insane. So, do you use this 1031 exchange or?
I have, yeah.
Okay.
I've used it before. Just you have to sell the property, but you have to be really careful. You can't just tell the IRS after, hey, I did a 1031 exchange. You actually have to hire a company that does it. You have to pay them like $1,000 or something because after you close on that property, the one that you had mentioned, I think you said like 500,000. After you close on that, you don't touch that money at all. It
Yeah.
goes into that 1031 exchange account, and then you locate another property and use those funds. Let's say you don't use them all, the remainder of the money obviously goes back to you.
Okay. So essentially, that escrow is just you can only use that money to purchase another property
Yeah, or multiple properties.
or multiple properties. Okay, so it just has to be in the real estate world.
It does, yeah.
Yeah, and then so you could do it. How many times could you do this 1031 exchange? Is it unlimited or
Unlimited, yeah.
unlimited? So you can essentially just scale from 200,000 to millions on millions of dollars in real estate without having to pay any taxes.
Yeah, definitely. And a lot of people
That's
are doing that right
insane.
now.
Yeah.
Because like the prices have appreciated like crazy on investment properties, and maybe they could use that equity, and before they only had one investment property, now they could use that equity and buy two investment properties and not have to pay taxes on it.
Yeah, so you just compound your growth and
Yeah.
property. That's beautiful.
Yeah, and you just
And-
keep going.
Yeah. So how would you recommend somebody that's looking to purchase a investment property, not necessarily a primary house, right, or a primary residence? Would you recommend them to go the route of opening up an LLC and putting it under a business or putting it under their personal name for tax purposes?
It depends. Well, okay, for tax purposes, I would definitely do it under a corporation, under an LLC. It also, I'm not a CPA, but it also gives you the ability to write things off
Yeah.
a lot easier because you just expense it through that corporation.
So what type of things could you write off? Like any
Uh,
expense, essentially.
Well, not like any, like you can't go on a trip to Europe, or maybe you
Yeah,
can if you're
yeah.
checking out real estate properties.
Yeah, I know people that do that.
Yeah, yeah. I mean,
Yeah.
go over there, check out real estate properties. But I mean, you could put like the car payment on there. It's also cleaner for accounting purposes, like to pay your contractors and whatnot. But the second biggest benefit though for taxes with real estate investing is also the depreciation. You could depreciate the properties over 27 and a half years. And that right there, it's like, it's not a real expense because other things that you write off, like you're actually spending money on that.
Yeah.
And like the money's leaving, like you write it off and people say they call it good,
Yeah.
but depreciation by itself, you're not writing a check for the depreciation amount to anyone. It's just something the IRS gives you as a benefit.
So if you depreciate it like that, and let's say you have a depreciation of, I don't know, maybe $10,000 a year.
Yeah.
And you're getting income of $10,000 a year from the property, you're paying zero in taxes.
That's right, yeah.
Essentially, your net income is zero.
Yeah.
That's golden. So that's another way to basically get tax advantages with real estate.
Yeah, depreciation is huge because you're not actually spending money on depreciation.
That's awesome. What about for a person purchasing a primary residence? I know there's a couple of tax advantages for that as well, not just for investments. So for if somebody's buying their first homestead or their first house, what tax advantages do they have?
You could for any of the loans, whether it's in your personal name or not, you could always write off the interest on it. I believe you could also depreciate your own home as well. And when you sell your home, if you're single, you don't have to pay capital gains if you hold on to it for over a year, up to 250,000. If you're married, I believe it's 500,000.
Okay, that's awesome. And if you sell your primary residence, can you do the 1031 exchange, or that's only for investment properties?
That's only for investment properties.
But if you sell your primary residence, could you still move into another primary residence without having to pay capital gains on a certain amount with a certain amount of time, or no?
You could if you stay under that $500,000 cap.
Under the $500,000 cap.
Yeah, if I believe that is still the cap for it. Yeah. But what you could also do is, it was your primary, then you moved out, and then you rented it out, and then you call it investment property.
Okay. So then there you would qualify for the 1031 exchange.
Yeah, you could. Yeah.
Okay.
I mean, just got to be tricky. You got to do it, truthfully. Like, you actually have to have made it an investment property, and you can't have the homestead exemption on it.
Okay. Yeah. You can only have one or the other. You can't just get both. You can't have the best of both worlds here.
Yeah, because people ask me that, like, okay, I want to do homestead, I want to do 1031. I'm like, which
I
one?
want to do everything, man.
Yeah.
I don't want to pay anything in taxes.
Yeah, I want the IRS to cut me a check after I just made $200,000.
That's beautiful, man. Because one of the biggest expenses that people in general, business people in general, or people in general have is taxes. Yeah. That's one of the things. Uncle Sam is gonna take all your money if you allow him to. So if you start using these loopholes and these legal ways of basically deferring your taxes, you're gonna start becoming wealthier in the long run.